Hey guys, my name is Nicolette Mashile. I am also known as the Financial Bunny. Welcome to the Financial Bunny TV, and we're kicking off our investment academy, or a couple of investment videos. I absolutely love the word academy, so I throw it around every single time. But remember that nothing that I say on this channel or any of my videos constitutes as financial advice. If you are looking for financial advice, please speak to somebody who is certified and registered with the FSCA. So a lot of people ask me, Nicolette, where do you invest? Nicolette, where are you putting your money? Nicolette, how are you growing your money? And in actual fact, in one of my financial coaching sessions of last week, I had a gentleman right there. So what I usually ask in that form, I say, what is your burning money question? And his burning money question is, how can I make more money legally, right? And I was like, okay, I get you. Because there are many illegal ways to make money, but every single one of us is always looking for the legal ways in which they can make money. Now, of course, if you are looking for the legal ways in which you can make money, one of the things that is going to come into play is that you can use money to make more money. So we've got to put our money at work so that it makes money for us. Now, the three things I think I've spoken about previously, but I'm going to repeat them in this video. The three reasons as to why a lot of people want to go into investing is certainly to make them more money. But when we look at it and we look at what is the outcome of your investing, what is the goal of your investing, one of these three things has to come up. It's either you are trying to preserve the value of your money. Remember, a rand today is not a rand tomorrow. Inflation steals away the buying power of our money. So what is inflation? Inflation is the increasing of prices of goods and services. So a weave this year may cost you 3,000 rand. In a couple of years, the value of buying a weave may be 5,000 rand. But if you're still holding on to your 3,000 rand, it means a couple of years from now, you will not be able to buy yourself a weave. So that's basically what preservation of value is to make sure that your money maintains its buying power, and today's money can buy you the same things in a couple of years' time. That's basically what it is. The second outcome that you ultimately want from your investing is also what we call growth or appreciation. So in other words, you don't only want your money to preserve its buying power, you want it to actually have additional buying power. So you want it to grow. You want it to actually have more money. If it's not necessarily money, it's whatever asset you are investing in. Let's take a property, for instance. If you buy a property this year at 500,000 rand, you want after 15 years that property is maybe worth 750,000 rand or even more. It needs to beat inflation or the rate at which inflation is increasing, right? So that's also very important to remember that, yes, it might be 500,000 this year, and after 15 years, it's 750,000 rand. You might just find that 750,000 rand is still only able to buy you the same type of house, which then ultimately means that you only preserved the price of the asset but did not actually have a growth in the asset. And generally, what a lot of us want is that the growth or the appreciation of the money or asset needs to increase above the rate at which inflation is growing. So that's really important. And the third thing that a lot of people want out of their investments is what we call passive income. So like me, who doesn't want kids, so I'm just like, all the money that I'm putting away now needs to give me some sort of an income now, because honestly speaking, I'm not really sure what's going to happen in the future. I might not have kids, and now I'm here accumulating, stinging myself certain things because I'm trying to increase my assets, but my assets are not giving me a continuous monthly passive income. That for me is not ideal. So if you are an investor like me, you may be looking to only invest in assets that are going to give you an income today, an income that is either bankable or one that you can reinvest into that asset so that it can actually grow even more rapidly. Remember, we speak a lot about compound interest, and compound interest can only come into effect if you reinvest whatever you are making from your asset. So let's say, for instance, you have cows or livestock. If your livestock gives birth to a calf, you now have a new calf which you did not necessarily buy, but it is the return on the investment that you initially made by buying the other cows, right? Now, if you slaughter that poor calf when it grows up to be a cow, it means that you are eating the interest. So now all of a sudden, you are not reinvesting back into the business. But if you allow the calf to grow and then it itself either impregnates another cow or itself becomes pregnant, now all of a sudden your interest, your money is hard at work to make you more money. And that's basically compounding in effect, right? So that's what we're talking about. Those are the three main outcomes of why people want to invest, or the outcomes of their investment strategy. So which asset classes, which is ultimately the video of today, can you invest in? How do you invest in them? And when I say how, I'm not going to go deeply into how you invest in these things. I'll tell you what you can buy and then ultimately how they make you money. In the next video, we'll go asset class per asset class and look at how do you invest in the stock market if you are in South Africa, if you are in Kenya, if you are in Botswana, or anywhere else in the world. So today we're going to deal with the 6 asset classes. I know they talk typically about the 5. I like to add the 6th one, and you will find out now what the 6th one actually is. So the first asset class that I want to talk about is, of course, the stock market. Everybody is crazy about the stock market. Everybody wants to invest. One of the most asked question that I get is, I want to invest in shares. How do I invest in shares? And I think it's great that South Africa has made it a little bit more easier with platforms like EasyEquities to be able to invest in the stock market. I do, however, think it's important to, before you go into the stock market, to ask yourself, am I ready to actually invest in the stock market? Now, if you are investing in the stock market in South Africa, you are ultimately investing in buying partial ownership of listed companies. I hope that makes sense. That's why sometimes it's called the equity market. If you know what the meaning of equity is, equity ultimately means ownership. So you are partially buying, or you are buying a partial a piece of an actual company, partial ownership of a company. So that is the stock market. It's also sometimes called shares investing. I know that in different parts of the world, people call it stock, people call it shares, people call it equity. So all those words don't necessarily mean the same thing, but they allude to the same thing, right? So how do you actually make money from the stock market? So let's say, for instance, and I'm going to use a very simple example. Let's say a company like Vodacom wants to expand into new territories, right? Now, for them to be able to expand into new territories, whether it is be from a technological or geographical point of view, they need an amount of money. So what they would do is they would put out what is called ordinary shares that the public can buy. So you would buy pieces of Vodacom, right? And that's how they raise funds to be able to fund their expansion plan, okay? So now they've raised all that money, they funded the expansion plan, they've expanded, they've gotten a bit of market share, or they've increased their market share, which means that the share price of Vodacom will go up. When the share price of Vodacom goes up, it means that your little piece that you bought also expands. Does that make sense? So when it expands, it becomes more than what you bought it at. So let's say when Vodacom was still calling out, they were selling their shares at 10 Rand a share, and you bought 100 shares. 10 times 100 is 1,000. So you would have spent 1,000 Rand, right? The 1,000 Rand is what you have spent, but it is also the value of your share portfolio. Then if Vodacom does really well, the expansion pays off, then that little share price or that piece that you bought expands and the share price goes up. It now means that the share price is now no longer 10 Rand. So let's say by some miracle, it jumps to 50 Rand. Like, look, this is an example. So don't now go to Vodacom and say you want to buy the 50 Rand shares Nicolette spoke about. Please. Okay. So now it's 50 Rand. So now you are holding 100 shares. So you got to take 100 multiplied by 50. Now all of a sudden you have 5,000 Rand worth of shares. However, you have not made a profit Because it is just you growing the value of the portfolio of stock that you are holding, right? You only realize a profit when you sell those shares, which is why you'll hear a lot of people talking about buying to hold. It means that you are buying and you are holding because you see potential growth in that specific company. But if you go back a couple of years in most stocks, you will see that there is a trend of stock prices going up. It may have dips, but you will see that the graph almost looks like it's going all the way up, which is why some people will say stock market is a long-term type of investment, and you've got to go in for like 15 years or so. Warren Buffett always says invest in companies that are going to be here in the next 20 years. So these are the things that you've got to keep in mind. How do you make money? That's the one way of making money, is when your share portfolio grows from what you've paid for it, and then you sell and then you make your money. The other way that you would make money is from when the company pays dividends. So dividends are like a thank you or an incentive, a share of profits from the company. They are not compulsory. So it will be at the annual general meeting where the board of directors will make a decision as to whether the company can afford to pay dividends. Some companies don't pay dividends. They take their dividends and reinvest it into the company to make sure that they increase their market share and actually increase the value of the company, so that ultimately you can actually make more money. The second asset class we're going to talk about is bonds. Now, some people call bonds fixed interest shares, basically. But a bond, remember what a bond is. It's you and me have a bond. If there is a relationship where either you owe me or I owe you. So a bond basically is when we ordinary people or big companies borrow money to either government or corporate companies so they can do almost similar to what Vodacom wants to do. So let's say, for instance, an Eskom wants to build a new power station. They would go to National Treasury and say, hello, Stelimali, Sifuna Upilda, a power station. And the National Treasury will be like, we don't have money for you guys. Go, let's raise a bond. Then a bond gets raised. They invite us as the public to actually borrow them. We're shonisering the government now. We borrow them, but at a fixed interest rate. So they will say to you, for your money, we'll give you 7% back. Then you borrow them a certain amount of money, and there's a fixed period. After that period, they've built their Medupi or their built power station. The power station is profitable. Then they pay you back your principal amount that you borrowed plus the interest that they had actually promised you, right? Now you will see that when interest rates go down, the bond market does really well, right? Very, very interesting for you to note. We'll get into it next week when we have a conversation further about bonds. The next one is real estate. Now, I know a lot of people think real estate is just property. It's not. Real estate encompasses any type of investment within the real estate market. So sometimes it's not brick and mortar. Sometimes it's investing in property shares, property bonds. It's investing in real investment trusts. These are companies that register as trusts that are going to be managing, buying actual physical properties. So there's various kinds of REITs. They are called real investment trusts, are called REITs, that you can invest in. Again, appreciation of the actual REIT, the cost that you bought it at. When it appreciates and grows, it means that that REIT is going to be more than what you bought it at. Remember, with all things, you only realize a profit or a loss when you let go of the asset, right? Because it's not just letting go of the asset at the price in which you're being offered, it is also the tax that you've got to remember that you probably are going to have to pay. The next one we're going to speak about is commodities. Now, when we talk about markets and what is actually, which commodities are being sold in the global market, we may be talking about things like precious metals, gold. Gold at some point used to be the darling of investments, oil, right? But you can bring it even lower to where you and I understand, and we call them soft or agricultural commodities, things like rice, things like wheat, things like livestock. These are also commodities. You put a price against them and they are sold at a price. The law of supply and demand really comes and thrives here because it is about supply and demand, right? The next one is cash. Now, it's weird that cash is one of the assets because a lot of people say, but I'm using cash to buy other asset classes. But a lot of South Africans, in fact, a lot of people are already investing in cash or cash equivalents. These would be things like money market accounts, things like savings accounts, things where you are giving a bank your money to put into a 32-day account. They promise you a return on that money. They take that money, they go and borrow Nicolette. Nicolette then takes out a loan but pays them back 13% on that loan. Yet they've promised you 5%. So you earn interest on your money. But there are other investments where they invest in currencies or they trade currencies. So like forex exchange, forex exchange, that one. That is a cash equivalent, right? Because you are dealing with the trading or the buying and selling of actual currencies. The last one, which I said I add on to my asset classes, is a business, entrepreneurship. Entrepreneurship and being able to build a business that is independent of you as the owner is building your own asset class. And basically, we all understand businesses is the selling of either products or services where you can put a price onto them. And my favorite example is always the avocado. Avocado, yes, can fall into the earlier commodities that we spoke about, but you can't just be trading and buying and selling avocados. You've got to create a business that grows avocados, that processes avocados, that maybe uses avocados to make other byproducts. That's when you now know you've built an asset that really is going to make you money, and you can pump money into it because you know there's going to be a potential return, which is why in your business plan, you would do what is called projected revenue and projected profits. And those are the different asset classes that in the next couple of weeks, I'm going to go break down into them and speak a little bit about them. So again, stocks, we'll talk about ETFs, we'll talk about unit trusts, we'll talk about mutual funds, we'll go into bonds, we'll talk about government bonds, SA retail bonds, municipal bonds, corporate bonds, which ultimately a lot of governments are now pumping money into. We'll talk, when we talk real estate, how do you make money? Buying to sell, buying to develop, buying land to develop, commodities, how can you invest in gold, how can you invest in oil, cash, how can you make it work? Cash is probably one of the safest, but also the slowest ways in which you're going to invest your money. And then, of course, how do you build a sustainable business that is going to give you a good return? So yes, this is just an intro into our investing series that I'm going to be doing. So do stay tuned in, buckle up, and let's go. Mwah.